Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of upbeat data and downbeat expectations. Firstly, ECB boss Mario Draghi took the rare step of criticising Donald Trump for trying to undermine the independence of the US Federal Reserve. Speaking to reporters at the IMF meeting in Washington, Draghi said he was certainly worried about central bank independence, and especially in the most important jurisdiction in the world. Equity markets ended last week in a risk-on mood. While the S&P 500 was up only about 0.7% on the day, that cements in almost a 16% gain for 2019 and takes it to within a whisker of the all-time high. Driving the market are good earnings reports, especially from US banks. That risk-on mood is also pushing up benchmark bond rates. Among American consumers, however, the mood is tailing off a bit. The latest sentiment survey in the University of Michigan poll saw a 1.5-point retreat. In China, their equity markets closed unchanged on Friday, but that is a 29% gain for 2019 so far. China's March trade balance swelled to almost $500 billion as exports recovered from their big dip in February. March imports, however, were quite restrained. China's merchandise trade surplus in March with the US seems to have been huge, as much as $200 billion in the month. But seasonal factors are likely to have played a big part in these unusual numbers. Still, it is the import fall that has analysts worried. Meanwhile, China's new bank loans jumped in March, rising far more than expected as policymakers push lenders to support struggling smaller companies and shore up their slowing economy. An even greater worry are the huge debts of local authorities that still haven't been fully quantified or the assets they back fully valued. Central government agencies are now involved in trying to sort things out, but the prognosis is not great. China's passenger car sales fell for the 10th month in a row last month, dropping 12% from the same month a year ago. Their whole vehicle industry is in reverse, except perhaps for the small electric vehicle segment. In Australia, the data is relatively upbeat, but the expectations are not. It is similar in New Zealand, and that poses a puzzle for monetary policy officials. What they see in the economy is different to what they hear from the voices claiming to be at the coalface. In a property-dominated economy, property voices are the loudest, and as usual, not really in tune with the underlying drivers of economic activity. It's a tussle between facts and feelings, the wealth effect at play. The US Treasury 10-year yield rose strongly at the end of Wall Street session and is now at 2.56%, which is a 15 basis point shift up in the past 2 weeks, a third of that in the final session last week. Gold is little changed at $1,290 an ounce. US oil prices are also little changed, now just on $63.50 a barrel, while the Brent benchmark is on $71.50 a barrel. And the Kiwi dollar will start the week at 67.7 US cents. On the cross rates, we're at 94.4 Aussie cents, and against the euro, 59.8 euro cents. That puts the TWI at 72.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.